Max Kaiser, where on earth are we going? Break down the points I've made because you've said that you believe by April, that's now only 3 or 4 months away, that it's going to be clear that we're in a full-bore collapse. What is your overall take since you were on a month ago?
Oh, yeah, five months away to April. Am I holding to my prediction, Alex Jones, that you will have a catastrophic event? And the question was, what would be the trigger? You know, on this show, your show, we talk about the potential trigger points. And one that I mentioned a couple of months ago, which is now on the radar of a lot of people, is in Japan, because Japan has the worst debt situation in the world. And they're bringing in a new government in a couple of weeks who has publicly stated that he wants to bring in a quadrillion in yen printing, and he wants to kill the Japanese yen, which would possibly be the first of the G7 nations to enter into a hyperinflationary currency collapse. So that's kind of where I'm putting my chips right now. I think the global currency collapse could start in Japan, and I'm sticking to my timeline of the next 5 months. I want to direct your attention to something that just came out a couple of days ago. In Switzerland now, they've introduced negative interest rates. This is something I predicted on your show, and a couple of others I predicted a year ago or so. And so if you keep your money in a Swiss bank, they charge you to keep your money in a Swiss bank. It's a negative interest rate. This is a form of a capital control. They don't want people putting their money into Switzerland. So if you're trying to escape, let's say you're a Japanese yen investor and you're trying to escape the yen and you want to put your money in Switzerland, the Swiss government will charge you to keep your money in a Swiss money market or cash account. And right now there are 6 countries in Europe that charge negative interest rates, with Switzerland charging a negative up to a 0.5 percentage point to a point on 2-year paper, and there's 5 other countries that offer negative interest rates. So this idea of putting your money someplace where it's going to be safe, well, these countries have figured this out, and they're charging you to keep your money in the bank. So not only do you have inflation to deal with, but you have the fact that the banks are now openly confiscating your money using negative interest rates. This, of course, will come to the United States soon enough, and so it'll come to the UK as well. Let's take a look at the global debt situation since we were on last. The G7 countries, they've moved from having a debt to GDP of 375% debt to GDP ratio. It's now at 415% debt to GDP ratio. And here's the story and the methodology and the psychosis. Ben Bernanke talks about deflation, and he therefore jacks interest rates down to near 0%. In fact, by putting interest rates near 0%, he causes deflation. He causes now the insurance industry has stated that because interest rates are so low, they can no longer operate as insurance companies. So if you don't have insurance, you don't have private property. If you don't have private property, you don't have capitalism. So the insurance industry is now saying we can't operate with this low interest rate environment, so that's a form of deflation. The wages are getting completely scrubbed. There hasn't been any wage growth in years. That's a form of deflation. And so Bernanke says we're going to lower interest rates to fight deflation. But in fact, by lowering interest rates, he's guaranteeing deflation. At the same time, he is creating, and this is a remarkable statistic, the bond market in America is at a 240-year high. The bond market in the United Kingdom is at a 300-year high. Never have bonds in 300 years in this country, United Kingdom, have been higher than they are now, or in 240 years in America than they are right now. That is a classic bubble. When people say, well, what about this idea that interest rates are going to go higher? Interest rates will go higher when this bond bubble collapses. And this is part of what I'm saying in the next 5 months, the trigger that will create the cascade, the domino effect, probably starting in Japan, toward a global sovereign bond collapse, which means interest rates, which are the inverse of a bond price, go up dramatically. So they're just going from distraction to distraction. But meanwhile, the main theme here that I'm going to emphasize is the central banks themselves that for 30, 40 years were colluding in pushing a financialization, a transactionalization, a world where work and labor was replaced with technocracy and money, they no longer trust each other. That is a fundamental difference today. Started in 2009 after the big collapse of 2008, and we know that they don't trust each other because they themselves are the biggest buyers of gold. Now, here's the big moment that's going to change everything, is when central banks, who are now issuing money or creating money through quantitative easing to buy government bonds, one of those central banks is going to break ranks, and they're going to start printing money to buy gold. And that will be the moment when gold starts to go on a magnificent tear on the upside, and the global sovereign bond market starts to collapse. Because one of these banks is going to say, enough is enough. The obvious contenders are China and Russia. Those are the obvious contenders. The obvious contenders for a currency collapse, hyperinflation, we see in Japan and in the UK. The UK is has 900% debt to GDP. It's one of the worst in the world. So that's why we're here, because we're covering the collapse in London. And since we've been here, as you pointed out, the rhetoric coming out of the Bank of England is that quantitative easing doesn't work anymore, the debts are unsustainable, and the economy is collapsing, and there's very little that anyone can do. So that's pretty much the scenario up to this point.
How is raising all these massive taxes in Europe and the United States going to fix things? So they're not idiots. They know when they raise taxes on the poor and middle class, it's going to make these countries like Greece, Ireland, Spain, the United States go into cardiac arrest. But that's what they're doing. The Republicans and Democrats are debating how much taxes to raise instead of talking about, trying to rebuild the country. What's your take on that?
Well, raising taxes will not increase the tax take at the end of the year, because it'll put more people and companies out of business than any incremental gain on a marginal tax increase. So net, the tax take is going to be worse. The reason I point to April of 2013 as my target date for the collapse is because I think the tax revenues reported for 2013 in the United States will be shockingly under estimates, and this will force the major rating agencies, Moody's, S&P, and Fitch, to downgrade the U.S. government bond. They've already downgraded it once.
Sure.
We think we're going to downgrade that again.
But the establishment knows that, so they want to destroy the country.
But the establishment is buying gold. That's what I'm saying. They're buying gold and silver, and because they don't trust each other, and they know that in extremis, even Alan Greenspan famously said that we learned from the collapse of Germany in the 40s that in extremis, only gold is counted as money. And Alan Greenspan, of course, is the maestro of the central bank that is the creator of the bubbles that of course, are the monster that ate the global economy. So for him to even point this out is quite significant. And this is unknown amongst those who understand the history of banking and money, that when you have this type of crisis, gold is really the only extinguisher of debt, is one way to
Sure,
put it.
and they can continue to kind of put things off, but there's still that slow slide. I mean, the economy worldwide is getting worse and worse. I want to come back and ask you, Max.
Well, the slow slide, it's deceptive, because if you look at a chart like Enron, remember Enron, the stock went from $2 to $90.
Until it stay there. Explain it to us on the other side.
As Skynet continues to rise, most Americans have no idea the arsenal their own government is prepared to use against them. Walking weapons and unmanned drones that will find their way to U.S. soil if they haven't already. But the future is not written in stone. Join InfoWars for the first ever drone mob December 8th at Zilker Park in Austin, Texas. This family-friendly event is to inform the public of the weapons that target us. Bring your own drones and spy planes as we make the statement that we don't want our weapons turned against us. Be there at 11 a.m. There will be some amazing giveaways and even a video contest. So bring your camera, because whoever films the best drone video at the event and posts it up on YouTube will receive 1,000 Federal Reserve notes. And be sure to use the hashtag DroneMob on Twitter and visit Infowars.com for more details.
Going back to Max Keiser. Okay, Max, go ahead. You've got the floor with the point you were making about any way to arrest these bankers, any way to bring them to justice, but you were making another point as well.
Yeah, no, the guests on your show you've had, and we've talked about this collapse coming, and the question always is when. And I think that it's, if you're standing on the surface of the earth, it's tough to see that you're actually standing on a round object, because it's a very large object. And this crisis is very large. But when it happens, it'll happen quite quickly, because this is an historic bubble we're talking about for bonds. You have to go back and compare it to, let's say, the tulip bulb mania in Holland in 1634. The price of tulip bulbs went from 1.5 to 60 to 0. In France, during the Mississippi bubble, the stock in that Ponzi scheme went from 500 to 18,000 to 0. The South Sea bubble of 1720, the stock went from 100 to 1,000 to 100. Now, more recently, with Enron, the stock went from $2 to 90 to 0. What I'm saying is that the government bonds in America, the U.S. Treasury bond, has never been higher in 240 years. The Treasury bond in the UK has never been higher in 300 years. And when this bubble pops, it'll collapse by 50, 60, 70% with lightning speed, as we've seen with these other historic bubbles. So it'll be too late to do anything at that time. You have to be prepared beforehand. And if you want proof of what I'm saying is true, look at what these central banks are doing. Since 1971, they were net sellers of gold and they bought paper. But from 2009, after the collapse of 2008 of Lehman Brothers, they became net buyers of gold. If you want proof of what I'm saying is true, look at what these central banks are doing. Since 1971, they were net sellers of gold and they bought paper. But from 2009, after the collapse of 2008 of Lehman Brothers, they became net buyers of gold. They're buying over 500 tons this year. And because they don't trust each other, because they know this bubble is about to pop. Because they don't trust each other, because they know this bubble is about to pop.